Hey everybody, welcome back to 5 Minute Financial Markets. Day 2 of the biggest week of the year is in the books and it did not disappoint. CPI number came out before the bell and it was a very pleasant surprise for investors, coming in at 6%, slightly below the consensus. That's the core inflation. Headline inflation at 7.1%, which is 2 ticks below the consensus, and the market ripped. Here's yesterday's close, just shy of $3.99 on the SPY. Pre-market trading gapped up to 401, and here's where the CPI number hit, and we rocketed up to 414 before the open. Settled back down to about 410 at the open, dropped off early, but came back to retest that 410 level. We've talked about before how important those $5 increments are on the SPY. And then the market promptly went about filling that gap, selling off for the first half of the day, all the way back down to within 14 cents of yesterday's close. Completely closed that gap. This was a natural entry point for a short-term day trade. First of all, it was the previous day's high. We've talked about how previous days and previous weeks' highs and lows are big areas of support and resistance, but also it was the gap fill. So if you had gotten long here on a same day 400 or 401 SPY call, you could have made a 60 to 70% return in about 45 minutes. From here, we just chopped sideways, retesting the $400 support level and closing around 402. Taking a look at the daily chart, we are firmly back inside this uptrending channel. It's been holding us for about 2 months now since the October CPI number. After piercing just slightly below it on Friday, we reconfirmed back inside yesterday, and then a huge gap up to 410 before selling off back into the bottom half of the channel, closing right at about the 200-day moving average. Now here's something interesting. For the first time all year, we actually have the body of a candle above this downward trending resistance line. This is the line that has held resistance every time we've hit it this year. January, March, August, and even earlier this month. Every time we've hit this trend line, we've rejected off hard. This time we came back to retest it and actually broke through it at the open. It'll be very interesting to see where we go from here, but that's all going to depend on the second big news item of the week after CPI, which is, of course, the FOMC rate hike decision. It's going to be 50 basis points. Everyone knows that. The only question is, what kind of tone is Jerome Powell and the Fed going to send going forward? If they're dovish, we'll rip higher. If they're hawkish, we'll rip lower. They're probably going to land somewhere in between, and it's going to be up to the market to parse out what they're actually saying. So that's the second big market driver of the week. The third one is the huge options expiration coming on Friday. Over 6 million open interest shares on the SPY alone. Trillions and trillions of dollars worth of options expiring this Friday. And it's the last big options expiration of 2022. So it will be very interesting to see where we land. Right now, Friday's max pain is coming in at 392, which means Wall Street would like to see a $10 move to the downside, but these open interests are going to change a lot between now and then, so we'll have to see what it looks like on Friday. Looking at the VIX, the volatility index, we gapped up yesterday to retest this trend line, and of course today flushed right back down to where else? That same 22 support and resistance level we've been talking about for 3 weeks now. I expect it to hang out here until 11 a.m. Pacific tomorrow when we get the Fed rate decision. Checking back in with silver, we had a healthy little consolidation yesterday, just regrouping after a big move up, and today it resumed its push higher up to almost 24.5. It pulled back to close slightly under 24 at the end of the day, but silver is showing so much strength right now. I wouldn't be surprised to see some near-term consolidation after this big run it's had. You look at the RSI, the relative strength index on silver, it's up around 70, which is getting into overbought territory. It's definitely due for some consolidation here, but the mid to long-term view on silver looks really strong. Stay tuned for tomorrow's Fed rate hike. As I said, a 50 basis point hike is all but a done deal. The futures market is pricing it in as an 80% likelihood, so it would be pretty shocking to see the Fed do anything but 50 basis points. But again, it's not the rate hike, it's the language they use going forward and their guidance that's going to drive the market from here. That's all I've got for today. If you enjoyed this, please hit like and subscribe, and we'll see you next time.